The housing sector in India is at a sweet spot currently. Now, favorable market dynamics with themes like affordable housing, lower stamp duty costs, and lower interest rates have played out extremely well for the entire sector. Residential real estate seems to be leading the multiplier effect even within the industry as a whole, whether steel, cement, and the like, and obviously is aiding the demand momentum for housing finance companies. ET now spoke with Mr. Keki Mistry, who is the Vice Chairman and the CEO of the leading housing finance company in the country, HDFC Ltd. Mr. Mistry helps us understand the key triggers in the industry as well as the road ahead for not only the industry but also HDFC Ltd. Mr. Mistry believes that COVID was a critical inflection point with regard to housing, since everyone, the general population, was looking for larger homes given the new work from home culture. Now, the portfolio of affordable housing companies has seen an uptick, just as housing has seen an uptick across the last year, and there has been a boost in both disbursements as well as home loan growth. Now, Mr. Mistry said that over the last 20 years, while incomes have continued to go up, the rise in property prices has not followed suit, has not been proportionate. So, this has made the housing sector slightly more affordable. Now, as regards HDFC Ltd, Mr. Mistry says that the company has witnessed a very healthy pickup in disbursements. So, for quarter 3 of FY21, which is December 2020 quarter, as well as for the March 2021 quarter, HDFC Ltd saw record disbursements in its history. The momentum subsequent to that in July of 2021 has continued, of course subsequent to the second wave, and the momentum there has been almost a growth of 14% month on month versus June 2021. As regards the average loan size, he says that HDFC Ltd has disbursed an average loan size of around 30 lakhs versus 27 lakhs of average loan size in the last year at the same time. So, a pickup both with regard to disbursements as well as average loan size. He says the uptick in average loan size is across the board, across metros, across tier 1 and tier 2 and tier 3 cities. However, now why has there been this increase in average loan size? He tells us that there have been more volume of flats sold in tier 1 cities which are more expensive, which is why the average loan size has gone up for HDFC Ltd. However, he says that the demand is coming from across the country. There is pan-India growth and pan-India demand. Whether you talk about metros, tier 1, tier 2, tier 3, all of these are seeing a good structural demand uptrend and uptick. As regards the demographics behind who is purchasing residential flats, the average age of the person purchasing a residential flat is around 38 to 40 years old. As regards the opportunity going forward, he says that 2/3 of the population has not even contemplated buying a home, and 10 years down, the entire population will be turning into home buyers, which will mean a huge change, a structural demand created within the country. He sees the upside in the housing sector, not just in the short term, but also in the medium and the long term. That's the underlying factor of it. So a lot of positives for the housing sector as a whole, and the housing finance sector is set to benefit from all of this uptrend.